Welcome to this explainer. I am so pumped you're here today. Look, if you're gearing up to grab your very first prop firm challenge, you've probably fallen down the rabbit hole online, right? Seeing dozens of companies all swearing up and down that they're the absolute best. It is honestly incredibly overwhelming. So our goal today is super simple. We're going to demystify the big three industry heavyweights, FTMO, FundedNext, and the 5%ers. By the time we wrap up this explainer, you're going to have a crystal clear roadmap to find the absolute perfect fit for your first challenge. Okay, let's dive into this. I want to start with a concept that'll completely anchor how we look at this whole thing. Think of choosing a prop firm like choosing between three different gyms, right? All three have free weights, they all have treadmills, but one might have a massive pool, another might be way cheaper, and a third might be just right down the street from your house. Now, the gym with the pool is only better if you actually plan on swimming. It's the same with legitimate prop firms. They all essentially offer the exact same core deal. You pay a challenge fee, you pass an evaluation by hitting your targets without breaking the rules, and boom, you get a funded account where you keep the lion's share of the profits. The amenities are what differ, and we need to find exactly what fits your specific trading style. So, here is our roadmap for today. 1. The overall prop firm landscape. 2. Our three industry heavyweights. 3. Evaluation rules and targets. 4. Payouts, splits, and scaling. And finally, number 5, your personal decision framework. Section 1. 3 industry heavyweights. Let's meet the contenders. Now, what's really interesting about the evolution of this industry is that 2015 is literally ground zero. That's when FTMO was founded in the Czech Republic. They are the true pioneers here. I mean, when people think of prop trading, they automatically think of FTMO because they practically invented the modern challenge model that everyone else just copied. Then, barely a year later, in 2016, the 5%ers launched out of Israel. They quickly carved out this reputation as the scaling specialists for traders who want really aggressive growth. Fast forward to 2022, and FundedNext bursts onto the scene from the UAE as the high-split challenger. They've grown at warp speed just by offering highly disruptive, trader-friendly terms to shake up the older firms. Moving right along to Section 2, Evaluation Rules and Targets. Time to open up the rulebook. And don't worry, we're going to break this all down into bite-sized pieces. Before we get into the hard numbers, we have got to define a term that will absolutely make or break your challenge: static drawdown. What is it? Basically, it's a fixed loss limit floor that stays locked firmly in place. It never moves up, even as your account balance grows with your winning trades. This is absolutely crucial to understand because static drawdown is infinitely more forgiving than a trailing drawdown. If your account grows, your loss limit stays all the way down at that starting floor. It just gives you so much more breathing room. And the great news is, both FTMO and the 5%ers heavily rely on this, which gives you a massive psychological edge. All right. Let's put the costs and targets side by side. We'll use a standard $100,000 equivalent account for this baseline. Now, FTMO is basically the industry standard here. It costs $540, you've got a Phase 1 profit target of 10%, and Phase 2 is 5%. But take a look at the challengers. FundedNext comes in somewhere between $449 and $540, depending on the exact model, but they drop that Phase 1 target down to 8%. And then the 5%ers? They drop it even lower, just a 6% target for their high-stakes bootcamp. Honestly, if you're a more risk-averse trader, those lower initial profit targets from FundedNext and the 5%ers are incredibly tempting compared to that classic 10% standard. Now for the limits. FTMO keeps it super straightforward. A 10% static drawdown, a 5% daily loss limit, unlimited time to pass, and a minimum of 4 trading days. Now, a quick word of caution regarding FundedNext. They also offer a 10% drawdown, but you absolutely must check their specific rules carefully. Depending on which exact account model you buy from them, that drawdown could be static or it could be trailing, and the time limit could be unlimited or capped at 30 days. It really varies. Finally, check out the 5%ers. They run a much tighter ship with a 6% static drawdown and a 4% daily loss limit, but, and this is a big but, they require absolutely zero minimum trading days and give you unlimited time. That zero minimum days feature, that's a total game changer and entirely unique to them. So the crucial point is really understanding the structural DNA of the test you're actually taking. Both FTMO and FundedNext use your standard run-of-the-mill 2-phase evaluation. You pass Phase 1, great. Now do it all over again for Phase 2. The 5%ers totally flips the script on this. They run a single-phase, high-stakes bootcamp. You hit your target exactly once, and you are funded. That's the whole shebang. On to Section 3. Payouts, splits, and scaling.
otherwise known as the rewards. This is the part we all care about.
90. I just want to let that number sink in for a second. 90. This represents FundedNext's absolute monster of a day-one profit split advantage. With most firms, you know the drill. You got to grind and scale up over a long period of time just to hit the top payout tiers. Not FundedNext. They advertise a 90% profit split right out of the gate. It is a wildly aggressive, super trader-friendly number.
Let's systematically compare how these rewards actually shake out. FTMO starts you off at an 80% split, scaling up to 90, but their superpower is rock-solid reliability. You get payouts every 14 days like clockwork, and your challenge fee is fully refunded on that first payout. FundedNext, as we just covered, gives you that immediate 90% split. And here's the kicker. Day one payout eligibility. The second you hit a specific profit threshold, you can request a payout without waiting. That is huge for relieving emotional pressure. Meanwhile, the 5%ers starts a bit lower at a 50% split, eventually scaling to 80 with monthly payouts and fee refunds coming after you cross certain scaling thresholds. Now, how does this translate to building long-term wealth? Through scaling. FTMO will bump your account size up by 25% every 4 months, provided you maintain a 10% cumulative profit. FundedNext has a very similar, consistent profitability scaling model, but check out the 5%ers. They literally reward aggressive, profitable trading by doubling your account size. It's a 100% continuous doubling model every single time you hit your target. So you turn a $40,000 account into $80,000, they just hand you an $80,000 account and it keeps going. It's crazy. All right, Section 4, your decision framework. Let's figure out which firm actually fits you. Let's ask 4 quick questions to find your match. Question 1. Is this your first or maybe second challenge attempt ever? If you're answering yes to that, then you really should heavily lean toward FTMO. Why? Because of their totally unmatched 9-year track record and just bulletproof payout history. Seriously, check any independent forum. The overwhelming majority will tell you FTMO pays out every single time, no funny business. You are paying for ultimate reliability and peace of mind, which is exactly what a beginner needs. Question 2. Do you prefer higher profit targets with plenty of time or lower targets? Look, if you're super confident in your strategy and you don't sweat a higher hurdle, FTMO's 10% target is perfectly fine. But actually, scratch that. If you're a highly risk-averse trader, keeping your risk per trade very, very small, you might vastly prefer FundedNext's lower 8% target or the 5%ers' 6% target just to take that psychological weight off your shoulders. Question 3. How important is frequent payout access to you? Think about the mental relief of getting cash in your pocket fast. FundedNext's day one eligibility is an absolute lifesaver if you just want to withdraw a quick profit and de-stress. On the flip side, if you're naturally patient and totally disciplined, FTMO's super reliable 14-day schedule or even the 5%ers monthly setup will work out perfectly fine for you. Question 4. What is your actual trading frequency? Now, if you take setups every single day, honestly, any of these 3 will be a great fit. But pay close attention here. If you're a low-frequency trader who only takes a handful of really high-probability setups a month, you are going to thrive with the 5%ers. Because they have 0 minimum trading days and a limited time, you will literally never be forced to take a subpar trade just to meet some arbitrary quota. And this brilliantly illustrates a universal rule in the prop trading world. Guys, before you hand over your hard-earned money for a challenge fee to any firm, you have to run this 3-step verification. 1. Check their public company registration info. 2. Verify independent, non-affiliate payouts on community forums. And 3, actually read the public rules document thoroughly. Seriously, if any of these are missing or look sketchy, just walk away. So, to wrap up our deep dive today, the gap between these 3 top-tier firms, it's incredibly tiny compared to the wild west of the rest of the industry. FTMO, FundedNext, and the 5%ers are all phenomenal, legitimate options. Your only job now is to choose based on which specific features match your exact needs, prepare like crazy, and execute your strategy with pure discipline. Having absolute confidence in your choice is the foundation of your success. So the real question is, now that you know the rules of the game, which firm's rulebook are you going to use to build your trading empire? If you want the complete system I use, including templates and calculators, check out the Funded Trader Blueprint, linked below.